love the channel and find it useful in becoming a happy retiree. Subscribe today. We have so much to cover in the next hour, and this is specifically talking about your tax bill for 2018. We ran more than 50 different tax scenarios over this past week. So we know what the House bill looks like. We know what the Senate bill looks like. They're starting reconciliation on that probably as we speak. We're going to get a tax bill in the next couple of weeks. Very, very likely. And nothing's guaranteed in politics, obviously. But we know what are in these plans and able to run tax simulations or calculators. So I ran over 50 different tax scenarios, different incomes, single, married, 2 kids, no kids. And I'm going to get into some of those iterations to figure out if your taxes, specifically you listening right now, are going to stay flat or go down or go up. I want to understand if your taxes are going to stay flat, go down, or go up, because there is a lot of misinformation swirling around. We talked last week a lot about that information and that disconnect, and I want to get into some real live scenarios here, real life and live all together here on this Sunday morning. There is so much intrigue about this because there is nothing that directly impacts your net after take-home pay more than the tax bill that is forthcoming. There's nothing that has a bigger impact next year than this bill that's about to pass, this historical tax reform bill. And it's been many, many decades since we've had tax reform. I know exactly what you're saying right now. Hey, honey, are our taxes going up? Are they going to stay flat? Or maybe they're going to go down. All right, let me walk you through a couple scenarios. Again, I wanted to simulate these more than 50 different scenarios that I would say arguably cover 99% of you listening. Maybe 99.9% of you listening is what we iterated here. So think of it this way. You can enter lots of different variables in this calculated number of kids. I ran this with 2 kids, with 0 kids, single, married filing jointly, low income, middle income, high income. We also assume that a mortgage, because again, if you're listening and you're 30 and 40 and 50 and you own a house, chances are you haven't paid off the mortgage yet. You have a relatively sizable mortgage deduction that you take every year. Remember, the House plan reduces or potentially reduces the mortgage deduction level. The Senate is supposed to keep it the same. These are the nuances in the tax code as they reconcile this bill that could get changed. But these are the big pieces that are in place right now. Remember, the standard deduction today, it's roughly about it's going to roughly double, and that's the same in both bills. So you're going to see an individual get a little more than $12,000 as a standard deduction, a couple $24,000. But the elimination of SALT, state and local income taxes, the elimination of that deduction is a very, very big deal. And in most of the scenarios that we ran, that's where the good of the slightly lower brackets and bracket levels gets overrun by the bad of the loss of the state deduction. The House right now, their part of the bill looks like they're going to keep at least some state and local tax deduction, around $10,000. The Senate, not so much. So the calculator, you can enter in the state you live in. So you don't even have to be from Georgia just to call here. We can do any state in the nation. Filing status, that's single, joint. Itemize or not. Do you itemize now or not? What are your property taxes? How many kids do you have? We assumed in the scenarios that I'm about to go over that families had a mortgage. So if you had income of $100,000, you had a mortgage of $250,000 to $300,000. If you made $200,000, you had a mortgage of $500,000 to $600,000. Plus the average property tax of about 1.8% of the value of your home. So those are the variables, the very normal real life variables that we run into to put into this calculator. So what's fascinating though is there's still this misconception of who this impacts and who it doesn't. So politically, and this is, again, this is not a political show, but this is just, I'm telling you what's happening right now in the headlines. Democrats are saying that these tax changes, and they continue to stress this legislation is it doesn't help the middle class, or it's a middle class tax increase. Nearly all of the tax data that they're using is based on 2027, so 9 to 10 years from now, because the cuts that are coming on the individual tax side are supposed to expire. So this is because of the reconciliation process that we're going through to get this bill done. Right now, at least, those tax cuts are supposed to expire in 2027. So all of their messaging is coming from, hey, in 2028, 10 years from now, hey, your taxes are going up. And that message has really resonated. The polling suggests that 75% of voters, 75% of people, you listening, believe that they're getting a tax increase because of this legislation. And because of this legislation is again not for the middle class. The messaging maybe it's a good political move, but in a couple of weeks, as taxes really do start to go down, you are going to, or Americans are going to see an increase in their after-tax take-home paycheck. Again, right now, polling, 41% of America says my taxes are going up. 75% of America thinks my taxes are staying the same or going up, when in fact, the real numbers, only 7% of Americans are getting a tax increase. All right, this is kind of interesting. And Ryan and I were looking at this during the break. I'm going to do some other math here, and we've had a couple scenarios where taxes are staying flat. In Mike's case, taxes are going way down. It's a very big tax cut for someone like Mike. And we're going to go back here to the state of Georgia, and we're going to say that you are single. And we're going to say that you do itemized deductions, and you've got a relatively sizable mortgage, and you're paying about $40,000 in interest, or at least you're itemizing about $40,000. And your property taxes are, let's call it, $16,000 a year, and you've got no kids. So this is a high earner. So this is the upper 1%. So in the state of Georgia, if you make $400,000, or in America you make $400,000, you're kind of at the lower end of the upper 1%. And I'll say that again. You're at the kind of the beginning stages of the upper 1% of income. If that's your taxes are likely going up. Your taxes under the House plan go up by almost $6,000. Under the Senate plan, they go up by over $7,000. So that's who loses here under this tax bill. If you're a really high earner, your taxes are probably going up. And if you live in a state like California, New York, New Jersey, where you're losing a huge state income tax deduction, because state income taxes are higher in those states, around 10%, here in Georgia, around 6%, it's going to be even worse. Now, what's interesting is that if now this is for single, you get married and we keep all of these parameters the same, and you might actually save some money. So under the Senate plan, you'd save $6,000. So if this is you and you're in this $400,000 camp, no kids, some fairly big deductions, getting married saves you, what's that? That's almost $15,000. Pretty fascinating as we do the math. All of these, there's a lot of variables, obviously, that go into taxation. And this is just giving us some general guidelines of whether this plan, who it impacts, and to some extent, how much it impacts each category. We just heard from a high income earner, and it looks like, for the most part, his taxes are going to either maybe go down a little bit under one plan and up a fair amount under the other plan, or under the Senate plan. And that's what I've been seeing here as I've run 50, 60 different scenarios here. If you were to sum this up, lower income, if you're in the lower income categories, let's call it middle class income. We're looking at $75,000, $50,000, or $30,000. And if you're single, your taxes are going to go down likely. I ran a scenario here. If you single, 0 kids, make $30,000 a year, you get a 24% tax cut. Under the House plan, you're getting a 19% tax cut under the Senate plan. If you are single, 0 kids, making $50,000, you're getting a 7% tax cut under the House plan and a 4% tax cut under the Senate plan. So either way you slice it, taxes are going down. That's that's middle class America. If you're making $75,000 single, no kids, you're looking at taxes staying roughly the same, so staying about flat. Let's look at this filing jointly. Let's say you have $75,000 in income, jointly, 2 kids, taxes are going way down. 27% under the House, 44% under the Senate. So you're going to hear over the next couple of weeks a lot of political wrangling and headlines that they're trying to tell you that your taxes are going up and that this is not a middle-class tax cut. Again, I've run dozens and dozens of scenarios, and from what I can tell here, and I'm not a CPA, but I sat down with a CPA and went through this, is that for the most part, most people are their taxes are staying flat to going down a little bit. From in real life, about 7% of America is going to get a tax increase. And from everything I can tell, those are upper income, high income Americans. So this is not a tax cut for the rich. I don't know where that comes from, except maybe in the very beginning when this was first released and there were really no details, the numbers, they were lower brackets. So the 39.6 went down to 35. That was the initial thought. That's not even under consideration in either plan. So the House goes up to 38.5, or 39.6. It stays at 39.6, and they even have a higher tax bracket to try to catch people, high income earners, back up. And then under the Senate plan, you've got, again, a top bracket of 38.5. So the thought that all high income earners that were paying 40 are now going to drop to 35, that's just not the reality. They're not even debating that. So again, a big misconception about where this tax bill is going. Hi, I'm Wes Moss, and thanks for taking a minute to hear about what's so different about my new book, You Can Retire Sooner Than You Think. So unlike other retirement books, this book will give you a step-by-step guide, whether you're in your 20s or 30s or 40s or 50s, to learn from what these successful and happy retirees did to get there. I hope you enjoy the book, but more importantly, I know that it'll help you retire sooner than you think.